Hello, everyone. So today we're going to be covering the topic income statement. Income statement is basically where a business tries to calculate their total income and expenses and come up with a profit figure. So over here, first of all, we start with revenue, and then we have our sales returns. So sales returns, the synonym is return inwards over here, and anything minus in accounting is in brackets. So your sales less your sales returns is your net sales, okay? And then you've got your cost of sales. So cost of sales, you have your opening inventory plus purchase minus purchase returns. Then you've got your goods for own use or drawings. Now, whenever you have drawings, okay, you've got like a common drawings over here. Now, this is what owner takes money out of the business, and it could be like he could take either motor vehicle, bank, anything. So if owner takes goods, right? So it will be specifically mentioned over here. In this case, I don't think the owner took anything out. So do you see anything like with, owner big took out or like goods for own use? It's not mentioned here. So what you can do over here is then you got carriage inwards. Okay. Carriage inwards means transportation of raw materials into our business. So it's part of production. And carriage outwards will be around here where it is not part of the production, it's part of selling, right? Carriage means transportation. So remember, transportation inwards is part of production. We add that. Transportation outwards is for selling because the goods are made and now we sell them. And then we've got like cost of sales over here, total figure. So revenue less our cost of sales give us our gross profit. Second thing we have is our other income. So with income, anything with received is an income, okay? So you got like your discount received, your rent received, your commission received, right? Anything received is an income. The other thing is like you've got disposal of an asset. So when you sell an asset as a profit, you get over here. When you sell at a loss, it comes over here, okay? Loss on disposal, yeah? Then you've got your provision for doubtful debts. So this provision for doubtful debts, we're going to cover that later, right? So today's question we're solving is bank. So let's just minimize this here. And let's see our Excel sheet over here. Right, so we've got details, dollar, dollar. And then we've got our thick borders. Okay, so first off, we start with revenue. And then we write less sales returns. So remember, revenue in this case is 326,000, right? So we put that 326,000 over here. Okay. We've got our sales returns as return inwards of 4,300. So we're just gonna do is we're gonna highlight items that we take. So we've got sales done. We've got our return inwards over here done. So minus 4,300, and we get our net sales, which is, let's do this one over here, bottom thick border. Right, we get our net sales of around, right, so we can write here net revenue, and then we've got less our cost of sales. So cost of sales, we start with opening inventory, we add purchase, we less purchase returns, we then less drawings of goods. So in this case, there isn't any, but we're just mentioning it. We add carriage inwards, and we minus less closing inventory. Okay, so in this case, opening inventory is always mentioned in the beginning, which is 30,000. We've got our purchase of around 135,000. There isn't any purchase return, so we're just gonna put a 0 here. No drawings of goods, carriage inwards. Now the carriage inwards figure, you'll see over here, carriage of goods included 2,700 on purchases. So anything with purchase is carriage inwards because it's part of production. So you put 2,700 here. And then you've seen your closing inventory over here, which is minus 35,550. Right. So what you've got is this plus this plus this plus this plus this plus this. You've got your 13210. So this should be a minus figure. So minus this and this. Okay. So you got your bottom thick border and you have your this plus this. This is your gross profit. Right. After that, you add income. And in income, anything with received is an income. So the only item that you have with income is rent receivable over here. Now remember, trade receivable is not an income because it's a current asset. So you write rent receivable. You write brackets 14,500. Plus due. Plus due means you add the amount due. And you've got your 14,500 plus 1,500, which is your 16,000, right? So remember, anything that is due is plus, anything that is prepaid is minus. So the second thing we have is, let's just go for less expenses. So less expenses. Now, always start from the top. So the top we have depreciation, okay? Now remember, we have land and buildings. Only buildings is depreciated because land never loses value. Motor vehicles, and we have fixtures and fittings, right? So for buildings, remember, what you need to do is like, let's calculate here. So depreciation, land and buildings together is a combined value of 170,000, out of which we've got less the value of land. Okay, why am I doing this? Because you see over here, land and building 170. Now they mentioned over here, land costing 60,000 is not depreciated. So out of the total value of 170,000, which includes both land and buildings, land is not depreciating. So we need to take it out. So we minus our land figure, which is 60,000. Okay. And we get the figures for buildings, right? So buildings loses value over time. So that's depreciation. And you've got right your formula cost into percentage. So you got your 110,000 into 2%, which is your 2200, right? So then you've got your this is your depreciation value for buildings. Second thing you've got is you've got motor vehicles. So motor vehicles, let's look at what they mentioned. So motor vehicles are depreciated using the reducing balance method. So make sure you write the formula down. So write cost, okay? So cost minus total depreciation into percentage policy. So in this case, what's the cost value of the asset? The cost value is 30,000 minus total depreciation is 10,000 here into, I think it's 25%. Yeah, 25%. Okay. So then we got your figure here. 30,000 minus 10,000 into 25% is 5,000. Calling it a day? Okay. So 5,000 over here And then we've got our fixtures and fitting. Fixtures and fitting, the formula is cost into percentage. What? Nah, I'm just recording it so I can email it to them. See you. Bye. Okay, so cost into percentage over here, we've got, what's our cost for fixtures and fittings? Cost, fixtures and fittings, the cost is 7,000. And we multiply it into our depreciation of around, I think it's 10%. So 10% here. So 10% over here. So you've got your 7,000 into 10%, which is 700. This is your depreciation. Okay. So now we've got 3 depreciations done. We can put that down. So buildings was around 2,200. Okay. This one is 5,000 and this one is 700, right? So now we can go for the next expenses. So you can see over here, carriage outwards, right? So carriage outwards, out of 9,000, 2,700 is inwards. The rest is outwards. So here is 9,000 minus 2,700, which is 6,300, right? We've got wages and salaries, which is around 90,000. Okay. We've got our motor vehicle expense is around 11,250. There's another thing I missed over here. Do you see disposal account credit? So this disposal account credit means a loss on disposal. So we write loss on disposal around credit of 8,500, right? We're here. So do you see any bank, like, okay, so we've got insurance for 2,700. Now with regards to insurance, you got to be careful here. So insurance, 2,700. However, you should understand that insurance annual payment of 800 made on 1st January 2019. Now, annual payment is for the year. So this payment is for 2019, January till December. Okay, so that's first of the beginning of the month until the end of the year. Right. Now, our year ends on 30th September 2019. So October, November, December, okay, are extra. So anything we pay in advance is prepaid. Now, I want you guys to rewind and understand this. So we paid till December, but our year ends on September. So we paid for 3 extra months, which is October, November, December. So we minus the prepaid, which is, we have to calculate that as, we've got 800 into 3 by 12. Right. So this should give us around 200. So we get our figure of 2,500. Okay. The next thing we have is we have water, okay, and electricity. Again, remember this is owing, so we add the 200 with the figure of 6050. No, I think it's 750 in this case. Yeah, 750, my bad. So we write 750 here. Okay, we've got 6050 plus 750, we get 6,800. And I think we're almost done. Right, so the last, okay, we got like a few more. So marketing expense, 17,300. General expenses, 14,000. And we've got our provision for doubtful debt. Right, so provision for doubtful debt, you gotta know there's a formula here. What you gotta do is you gotta calculate, so let me just show it here. So provision for doubtful debts, okay? So provision for doubtful debt, okay? The formula is trade receivable minus bad debt into your percentage, right? So you put your little brackets around. So bracket here, bracket there, okay? So your trade receivable in this case is 35,000. Ooh, 35,000 minus your bad debt. So bad debt over here is 7,000. What does bad debt mean? Please, when customers cannot pay. So minus 7,000, close your brackets into your 5%, which is your policy. So you got your 35,000 minus 7,000 into 5%, which is 1,400, right? So after that, you got to look at last year's provision. So last year provision is 900. So you've got an increase in provision, right? So your increase in provision equals to this minus this, which is 500, right? So increase in provision, so increase in provision, right? So last year you had 900, this year you have like extra, like it's 1,400. So the increase in provision is an expense of 500. Okay, so you've got all that done. Okay, you put your little borders. Now what you need to do is you need to add all your expenses. So add all these expenses. Right, so this is my total expenses. Now my income, because it's one item, I can do is I can shift it over here. Okay, so now you've got to do is your profit for the year, right? So this is the heading. What you have is your gross profit plus your income minus your expenses is your profit for the year. So this figure is again a separate figure. Okay, remember gross profit is also, yeah. Okay, this is the heading, this is the heading, this is the heading. Right, so this is your income statement, okay? And I want you guys to solve question number 2 as homework, all right? And I will attach the format sheet for your convenience. Okay, so see you guys, bye.